If you could go back to February 2016 with 50,000 rupees and one piece of information, your money could be worth around 1.5 lakh today. But here is what nobody tells you. The same opportunity exists right now. You are living in someone else's regret right now. 10 years from now, someone will say, I wish I had started in February 2026. That someone is you. In next 12 minutes, you will discover three things. First, the three traps that kills 90% of the beginners. Number two, the boring strategy that beats the professional fund manager. And number three, how your 5,000 rupees can become 50 lakh rupees. But first, let's understand the inflation. Banks are not telling you the complete truth. That 10,000 rupees you deposited in the bank is worth 6,000 today. While the bank paid you 3,000 in interest, the inflation stole away 7,000 rupees. Inflation in big cities is approximately 10%. You are not saving, you're bleeding. By the time you finish watching this video, you will understand why disciplined investors started just 10 years ago have seen their money grown over by 230%. Most people look at the stock market as gambling or a difficult math exam. They are wrong. Today I am going to show you how a beginner investor can build wealth faster than most people expect, and how you could use a simple rule to build that portfolio which grows silently in the background while you focus in your life. I studied 100 plus hours of investors' portfolio who figured this out. Not to sell you a dream, to save you from the mistake which I made when I lost 5,000 rupees to a hot tip from a stranger. I'm here to give away the financial checklist I wish I had before I lost my first 5,000 rupees to a bad tip. Now, whether you are a corporate professional, a student who is just starting, or someone who is at a parent who wants to build a legacy, this is for you. Before we go further, let's kill the biggest lie. Stock market is gambling. Completely wrong. You drink Tata tea. You use Jio connection. You bank with HDFC ICICI. So when you buy a share, you're buying a piece of that business. The company grows, you grow. Except there is a test most people fail even before they start. This part is skipped by the gurus because it is not sexy. But it's why 90% fail. Most beginners don't fail because of the market. They fail because they start with a wrong preparation. Now here is the checklist which I want to give you of the red flag. Red flag number 1. Do you have credit card debt? 18% eating you alive. Stop. Pay it off first. You can't outrun 18% hole with a 12% ladder. Red flag number 2. Do you have 6 months of expenses saved? Not I think so. Actual cash in a separate account, because market will crash, and if you need money during a crash, you will sell your future at a 40% discount. Red flag number 3. Do you have a term insurance? What if you die tomorrow? Is your family protected? This is being responsible. A 50 lakh cover costs less than a Netflix subscription. Fix this today, not tomorrow. Now that your foundation is solid, let's deep dive ahead. Now you are already in the top 10% already. Here is where it gets interesting. The 15 minutes millionaire strategy. Now forget stock picking. Forget the next big thing. You have to focus on one thing, which is index fund. You buy all top 50 companies in one shot. If India grows, you grow. Diversification on autopilot mode. Now let me tell you something. 80% of the professional fund managers with MBA degrees and Bloomberg terminal fail to beat the Nifty 50 over 10 years. 10,000 invested in 2014 is 33,000 today. Despite COVID, despite crashes, despite everything, a 12% average returns for basically doing nothing. Sounds boring, right? Good, because boring is the strategy. Okay, now enough of theory. How do you start actually? 3 steps, 10 minutes and you are done. Step number 1, open a demat and a trading account. Now think of it like this. A trading account is where you trade the stocks, and demat account is where you store your stocks. You can use platforms like Zerodha, Grow, Upstocks, anything which is suitable to you. It hardly takes 10 minutes. Step 2, start with 1,000, not 50,000, not 10,000, just 1,000. Your first goal isn't to make money. It's understanding how the market behaves, how it feels when it drops 10%, how patient pays. Step 3, set up a SIP, systematic investment plan. 5,000 automatic every month for 20 years. Don't think, don't time, just automate. At 12% return, that becomes 50 lakh. You contributed 12 lakh. Compounding gave you 38 lakh. And that's the magic of compounding. Now, the trap that kills the beginner. Trap number 1, WhatsApp tips. Now, the uncle who made crores, he's selling courses, not buying stock. Trap number 2, day trading. SEBI data says that 90% of the FNO traders lose money in year 1. You are not the exception. Trap 3, checking daily. Now, research proves that investors who check less earn more because they don't panic sell on red days. Successful investment is boring, consistent, and patient. If it is exciting, you are doing something wrong. But here is a test that nobody talks about, the red screen test. March 2020, COVID, Nifty 50 dropped 38% in 30 days. Your 1 lakh became 62,000. Can you handle that? Most people panic sold. They locked in permanent losses. But those who stayed recovered in 5 months and made 60% of the gain. A crash isn't a disaster. It's a clearance sale on India's biggest companies. Now, Warren Buffett said it, be fearful when others are greedy. Greedy when others are fearful. When everyone's running for that exit, that's when you buy more. Not because you are brave, because you understand the math. 10 years from now, February 2036, you will either thank yourself for starting today or regret for the perfect time. The perfect time was 10 years ago, and the second best time is right now. Let's do a quick recap. Fix your foundation first. Open an account in 10 minutes. Start with 1000 to 5000 SIP. Buy Nifty 50 index fund and hold it for 10 plus years. Don't panic when it drops. That's it. That's the strategy. Your money in the bank is dying. Your money in the market, it is working for you 24/7, compounding silently. Stop just saving, start owning. February 2026. Remember this date. This is the day you either took action or stayed in analysis paralysis. The math is public. The data is real and the opportunity is now. What are you going to choose?